What's good, y'all? So today I'm gonna be going over my top-down analysis of what I look for from the higher time frame, scaling all the way down to the 5 minute, 3 minute, whatever time frame I enter on. So I'm gonna just jump right into it. There was actually a lot of good setups this week, but I'm gonna go back to the setup that one I took. I forgot what day it was. Wednesday. All right. All right. So this is Wednesday, February 25th. Right when the New York session opened or when the stock market opened. So the first thing I would do, I just look at the 1 hour just to see like what direction we're in on the higher time frames. So we can see here we're in an uptrend clearly. We had all this impulse move up, another impulse move up. Yeah, we shot down a little bit, but then we came back up and corrected, creating higher low, higher high, higher low, and so on. So going back to the 15 minute. So this is right at 6:30 when the market opened. So right here, I'm really just waiting. I'm not really looking for anything yet, just because I don't see anything. But going back to my top-down analysis, we see that on the 1 hour we were in an uptrend, right? So now I'll go down to the 15 minute. Sometimes I go to the 30 minute, but it's typically like the same thing as the 1 hour. So I'll just go down to the 15 minute. So what I saw here was, one, we had a rejection off of this 200 EMA on the 15 minute. So this 200 EMA acts as like a major support or a major resistance on the higher time frames. As you can see over here, price came down to the 200. It did break through, but then it came back up, and then it tried to break through again, but it couldn't fully break through. So then it had another push up, push back down, another rejection, push up, push back down with another rejection. So that's the first thing I see. I'm like, all right, we're rejecting this major support level right here, also known as the 200 EMA that I use. The next thing that I see is this top trend line right here. I see that one, and I see this one as well. So with that being said, so these trend lines, if you guys aren't familiar with it, they also act as support and resistance. You can see right here, this is the start of this impulse move up, came back down, tapped the trend line, came up, tapped it again, came back up, and tapped it again. So I'm like, okay, this trend line is a strong area of support, a strong area of rejection. So every time that it came down to this line, this trend line right here, it had some type of rejection reaction. So after seeing that, I'm like, okay, we're having good rejections off of the 200 EMA and the trend line. So after seeing all this, we scale down to the 5 minute. So the 5 minute is usually where I take my entries. This is where I have my highest win rates. I tried trading the 3 minute, 2 minute. Those work too. The 1 minute works as well, but you get wicked out a lot on the 1 minute. So just to keep it simple right now, we're just gonna do everything on the 5 minute. So after doing my whole analysis, looking at the 1 hour, seeing that we're in an uptrend, going to the 15 minute, seeing that we're in an uptrend right here, higher high, higher low, higher high, higher low, higher high, higher low, so on and so forth. We have the trend confirmation with these higher highs and higher lows. We have the rejection of this bottom trend line and the 200 EMA on the 15 minute. The 15 minute is the strongest for scalpers. If it's rejecting a certain level, whether if it's support resistance, supply and demand, whatever the case may be, if you are getting a rejection on the 15 minute time frame for scalpers, it indicates a very strong rejection. So I already knew once it came down here and tapped and wicked back up or closed back up here, then I'm like, okay, we're probably gonna just continue rejecting this area and push up. So going back down to the 5-minute, now is when, so everything I just explained from the 1 hour, the 15-minute, that's just my top-down analysis. From the 5-minute all the way down to the 1 minute is where I would look for my strategy or my system. So right now I'm just waiting. So boom, we now we have this impulsive move. Now going back to the system. And if y'all haven't watched my supply and demand video, go ahead and check it out. It explains each step, explains my strategy down to the T. It's very simple though. Like everything that you see right here, steps 1 through 6, is basically how I enter my trades. But anyways, after that, after this impulsive move, you can tell we have step 1. Step 2 right here would be our break of structure, which is the break of these highs right here. So now we have step 2 out the way. Step 3, identifying our supply and demand. And if you guys haven't watched the last video I posted, the supply or demand, in this case, it would be the demand. It's the last bearish candle before the impulsive move up. So right here, it would be this last black candle before this impulsive move up, breaking structure right here. So now we have steps 1 through 3. Step 4, identifying fair value gaps. And you can see we have one right here, touching our demand level right here. You can see we have like another one right here and then another small one right here. But honestly, we don't really care about these ones. The main thing we care about when looking for fair value gaps are gaps that are touching our supply or demand zone. Because we don't care if it fills right here, fills here, and then rejects back up. We don't care. The only thing we care about is if it comes all the way back down and touches our demand. So after seeing steps 1 through 4 out the way, I'm like, all right, now we just have to wait for step 5, which is waiting for the rejection. So now I'm still sitting on my hands, and we finally get that rejection. So now we have step 5 out the way. Step 6 is enter on the break of the candle. So as soon as it breaks the high of this candle, I would enter with the stop loss right at the low of this one. And then for TP, my first TP will always be the most recent high, which would be right here. Technically it will be this, but sometimes price doesn't go all the way to the wick. It will just go to the body. It's just something you notice over time with experience. Like you might put your TP stop loss at like the wick, like the literal high where the wick is, and it'll barely get close to it and then reject. So that's why I just like to leave it at the body. But for this specific play, since we see this triangle, I would have taken it to point B over here, somewhere in this area. Yeah, so I would have just collected somewhere in this area because it's point B of this triangle. So after we have this rejection, we're going to wait for the break of this candle right here. Another thing to add is, if you guys are familiar with chart patterns, this down here is a double bottom. And if you don't know what a double bottom is, it's basically just a chart pattern. Let me show you guys. So if you see these anywhere double top, you know, where price creates equal highs, or a double bottom where price creates equal lows, I'm not even gonna say most of the time it's gonna reject, but if you see that and then it rejects, then you'd want to wait for confirmation for it to go up, come back down, and then look for an entry to push it back up. You don't want to just get in when it reaches an equal high or equal low, but that's a whole different video in itself. But going back to this, so before I even get into the entry, let me just explain all the confluences. So what we saw right here is multiple taps of this trend line down here, right? We see a double bottom, which is a good confirmation that price wants to go back to the upside. We see this huge triangle that eventually wants to break out. We don't know which direction yet, but what gives us confidence in taking a buy is the rejections off the 200 on the 15-minute time frame, along with that double bottom. So what is that? That's already like maybe three confluences, and that's not even including what we see in our system. So we already have three confluences just by doing our top-down analysis, and now we have steps 1 through 5. So now we'll just see what happens. So once it broke there, I entered my position and I put my stop loss right here. My TP, like I said, it'd always be the most recent high, but in this case, I just took it to somewhere in this zone. I think it was like right here. And if we see it play out, and you see how when it reached this zone, like where this body was, like let's say I took it to the body. You see how when we reached there, literally right where the body is, it tapped it and then it started stalling and rejected back down. So that's why I say it's important to leave if you're going for a high or a low, just put it at the body, unless if you're confident enough that it's gonna continue pushing back up. But if you want to play it safe, just scalp and get in and out, just leave it at the body. But for me in this case, I just took it to somewhere within this area because this is point B of this triangle. And then you'll see it play out, and boom, it finally hit. So this is just a good example of my top-down analysis. As you can tell, it's not only just, like I'm not only just looking for supply or my system on just one time frame. Like I'm literally looking at everything that's going on. The 15-minute is very powerful for your top-down analysis if you're scalping, like if you're trading on a 5-minute, 3-minute, whatever it is. Anything under the 15-minute, the 15-minute will count as like the higher time frame confluence, just because we're scalping. And another thing is, you can see I'm combining my strategy with chart patterns. Yeah, just basically just chart patterns, because there's a triangle here, right here. There's a double bottom right here. So it just giving me multiple confluences that a breakout is gonna happen eventually. But this is just one example of a play I took. Let me go look for another play I took that was very clean. All right, so this setup right here is NQ. This was on Tuesday, February 24th. So let's see what time this candle was. 6:30, 6:35. So this is right after the stock market opened, like 10 minutes after. So what I'm seeing here is, I'm honestly like not seeing anything yet. Doing my top-down analysis, I can see that it looks like we're in a downtrend, but I can see this top trend line right here. And then we're just creating a bunch of equal lows at this level right here. So I'm like, okay, we get 1, 2, 3 rejections right here. All right, well, I'm gonna still sit on my hands and just wait. Looking at the 15-minute, we can see this triangle, this top trend line right here. Let me actually make this more accurate. Put it like right there. And the reason why I lined it up right here is because there's one tap right here, there's another tap right here, and these two taps right here. So I'm like, okay, we'll just see how it reacts when it gets to this trend line. So this is on the 15-minute. Let's see. So now we can see that looking at the 15-minute, we had 1, 2, 3, 4, 5 rejections of the support right here. We have a breakout of this trend line. And then now that it broke past, I would honestly like just move my top trend line to just line up with this one. Because sometimes, like let's say I left it like this, or where was it at before? Like this. Let's say it broke out, came back. It looks like it's gonna retest the trend line and continue pushing back up, but then we won't notice that it didn't fully break through sometimes. But besides that, we can see that we have rejection off of this support, pushing back up. The 200 is now below price, so it's going down to the 5-minute time frame. Now I see this impulsive move. This is all I'm waiting for literally every morning. This is all I'm waiting for, just an impulsive move after doing my top-down analysis. Now scaling down to the 5-minute, going back to my system, you can see we have step 1, the impulsive move. Step 2, our breakup structure is right here of these two levels. So we have one right there, and we have one right here as well. So we have 2 breaks of structures and the impulsive move. Now step 3, identifying our supply and demand. So in this case, it would be a demand setup because we're in an uptrend, and the demand would be the last bearish candle before the impulsive move up. I know in the last video I said to draw it down to, so the demand candle would be this last bearish candle before the push up. But when you draw the bottom, you want to put it at the swing low. Even though this is a blue candle, you still want to put the demand at the swing low right here. So now we have steps 1 through 3 out the way. 4, identifying our fair value gap. We have one right here, this whole area right here, where there's no wick on this side, no wick on this side. This is our whole fair value gap right here. So I'm hoping, after seeing this, the bounce off of this support, pushing up to this trend line, I was hoping that we can get a push, or hopefully a rejection off of this trend line to push back down to the supply, because we have steps 1 through 4. So now I'm just waiting to see if we get that rejection. So right here now we can see that we finally get the top of the zone. It is a pretty big zone, and it's honestly one that I wouldn't recommend trusting too much, but since our higher time frame buys look good after doing our top down analysis, after it rejected this whole support area multiple times, and we can see this triangle breaking out, it just gave me more confluence and confidence to take the play. So now I just be waiting for, after the rejection, I'm just waiting for the break of the high of this candle. In TP, like I said, it'd always be the most recent high. You can see this is a 1-to-1, which is why I put my TP at, you can either put it at this high, at the bodies of these candles, or if you don't really care that much and you want to go for a big win, you can put it at point B of that triangle. But me, I'm just leaving it at the bodies. So now we have a little over a 1-to-1. So we'll see now if we get that break. Boom, we got that break. I entered right there, put my stop down here. So now once you enter the trade, all you have to do now is just wait. You just set your stop loss, set your TP, and just let the play run. It was stalling a little bit, and we finally got that push up. But yeah, this is just 2 examples of plays I took this week. I took like maybe 4 or 5 trades. I mean, I had a completely green week, so it was pretty good. But I was just showing you the cleaner setups that I took this week, just so it'll be more easier to comprehend. But yeah, so other than just following the system, that's basically just my top-down analysis. Like, I look at the 1 hour, but I don't rely on it too much. I'm just trying to see if there's any gaps or where the 200 EMA is flowing on the 1 hour, but I don't rely on it too much. Most of my top-down analysis starts on the 15-minute, just to see the bigger patterns, the bigger picture of things. And then we scale down to the 5-minute, 5, 3, 2, or 1 to look for our entries. But for the most part, I recommend sticking to the 5-minute and let's say the 3-minute too, because those are the two strongest time frames for me, and that's where I have most of my like higher win rate in those two time frames. The 2-minute is pretty decent, but the 1-minute, it's like 1 minute is a little, I don't know, you get wicked out and then you have to re-enter and then it hits. Like, I think I just need to adjust and move my stop loss higher or lower depending on if I'm in a buy or a sell. But yeah, this is basically just my top-down analysis. Like, I look at the 1 hour first just to see, but I don't rely on it too much. I'm mainly looking at the 15-minute to really see where price is at and where the 200 EMA is at. Because you can see right here, every time it came to the 200 EMA, it would reject, came back up here again, reject, came here again, reject, had a fake out, rejected, fake out, and then a rejection all the way back down here. But once we finally got this very strong impulsive candle right here, this blue one, closing above the 200 EMA on the 15-minute, then I was like, okay, now I have a lot more confidence in taking this buy, in combining that with chart patterns as well. So it's not just simply, look for these 6 steps without looking at everything else. No, like, I'm looking at chart patterns. I'm looking at if the market is making higher highs, higher lows, what trend it's in on the higher time frame, and if there's any gaps to fill, everything like that. But these are just 2 good examples of my strategy, my top-down analysis, and just the plays I took this week. I will be dropping more. I know I've been slacking and I know I need to do more, but I'm just trying to take it one video at a time and just try to help the people out, because that's really what I feel like I should be focusing on now, rather than trying to be selfish and worry about myself. But yeah, I hope y'all enjoyed. If you got any questions, if you follow me on Instagram, just DM me, because I reply to everybody. Or if you don't, comment whatever you want to learn or whatever. I'll help you out. But I'll see y'all in the next video. See ya.